Good morning, ladies and gentlemen. A very warm welcome to you back on Business Today Television. We are in discussion with Mr. Ashok Atluri, CMD of Zen Technologies, whose third quarter earnings have given a bit of a pain to the market. Let's get Mr. Atluri into the conversation. Namaste Ashok ji, and a very warm welcome to you, sir. Year on year, the performance has been fantastic. A 42% rise in third quarter profit to about 42 crore rupees. The sales have also increased dramatically by 53% to 152 crore rupees. However, what is bothering the market is this sequential drop in profit from 63 crores to 42 crore rupees, and that's the third 10% lower circuit on Zen Technologies. Could you please explain the rise in profitability year on year, but the sequential fall in Q on Q as well?
So, we have been very candid with the shareholders that, this is not a quarter-on-quarter sector, the defense sector. And we also were able to predict that, with this year, we'll do a 900 crore turnover and, with the EBITDA margin yearly, or overall EBITDA margin of around 35% and a PAT margin of 25%. And we are on track for that. And even though the profitability is a little lower in this quarter, but overall, we think if you look at the 9-month margins, they remain at our guidance. And we think the 12-month of whole year guidance will also be intact.
Okay, let's look at year on year first. Let's hear your part of the argument, sir. At the moment, 42.7 crores, up 43%. What was the reason for the year on year rise in profit?
So, again, this all depends on the orders that we get and the product mix that we are able to execute. We execute the orders based on the deadline that we have from the customers. And if typically our margins in anti-drone systems are lesser than simulators, and if there is a heavy execution of anti-drone systems, our margins seem little lesser. But overall, again, as I said, we are comfortable with the 35 EBITDA margin for the overall performance.
Okay. What was the size of the order book at the end of the third quarter? How much did you add in the preceding 3 months?
Again, we were in the we did not add much. The execution happened during the thing. As you know, defense are very heavy in the fourth quarter. And we have been telling our investors also that towards the end of third quarter and fourth quarter, we'll start getting the orders. Third quarter, we did not get any orders, but we do expect orders to start coming in the fourth quarter. But we also expect some spillover into the Q1 and Q2 also of these orders.
The order pipeline, so basically, order book did not rise much. Yes, so that's what I want to understand. The final order book stands at 800 crores at the end of December 31st, 2024. Would you want to estimate what would be the order book by March 2025?
I would not hazard a guess at this point in time because, again, these are government things. But just to confirm that we are bidding with a domestic order pipeline is about 800 crores. And we seem reasonably confident about these orders coming through, in Q4 and Q1, but not later than Q2.
Okay, fair point. Given the fact that it's 800 crore rupees, not much is expected in terms of fresh inflows in Q4. You have somewhere like 4 quarters or 1 year worth of order book to execute. Am I right?
Yeah, that's right. Again, in this, there is a component of annual maintenance contracts that are executed typically over the next, 4 to 5 years. So if we remove that about 250 to 300 crores, then we have 500 crores of equipment orders that will be executed in the next 3 quarters for sure. Yeah.
Okay. So revenue for September 2024 was 241 crores. in June 2024, it was for 254 crores. What are the chances somewhere in the next 4-5 quarters this revenue will be overcome, in the sense that you will post a higher quarterly revenue than this?
No, so, again, we have guided for 900 crores. So, whatever is the deficit from 900 for and the 9-month turnover will be what we are guiding that the fourth quarter turnover will be.
So 254 plus 241 plus 152 minus 900, 253 crores is what you are looking for the fourth quarter, just to meet your guidance.
Absolutely, yes.
That's what
Yes,
I'm trying to
right.
check.
That's the deficit, yes, yeah.
Okay. So fourth quarter revenue is likely to be 250 crores in the thereabouts. That's what you are telling, that's what you imply. Am I right, sir?
Yeah. Yeah, absolutely, yeah.
And you've mentioned NPM and OPM at 25 and 35% respectively. What about the bottom line?
So the PAT I'm talking about was the bottom line. The 25% was the bottom line, yeah. And 35% is the EBITDA margin.
Okay, so fair point. So if 900 crores is the top line, 25% of that as
crores.
net profit would be somewhere like 225 crores. Okay,
Right.
out of which 79 minus 79 minus 63 minus 43 has happened. So you're looking at a fourth quarter profit of 40 crore rupees. Am I right, sir?
Yeah, whatever makes the 225, I think we should be able to do that very reasonably. I mean, without working very hard on that, yeah.
Okay. So we have the fourth quarter estimated 40 crore PAT versus on a top line of 250 crores. Now, Mr. Atluri, there was a very, very well subscribed pref offer that Zen Technologies had in the previous quarter. Many smart individuals invested a whole lot of money in Zen. Somehow they are underwater. Would you have a comment for them? At the moment, your stock is at a 7-month low.
Yeah, that's right. I mean, only thing I can tell the investors is that, we raise the money for acquisitions and working capital and R&D needs. All the three are progressing, and in fact, we announced based on the QIP. Actually, it was a qualified institutional placement. Based on the QIP, we have actually announced yesterday. We announced 3 acquisitions, which were pertaining to the. And one was in the field of robotics. That's one thing we think. Again, our focus has been what are the few Pareto areas which will India need to be absolutely world leader to become a winner, to win a war. And we thought robotics was one, and the second was the drone system. So we feel that even now, a lot of companies are still selling drones that are made of Chinese parts, which is actually kind of pathetic. So we are trying to support the ecosystem. If there's a great company we invested in called Vector Techniques, and they're very well known in the ecosystem. With our support, almost 40 to 50% of critical components will now be supplied by Vector Techniques, and I think not only for India but also for overseas. The bigger acquisition has been for anti-drone for the naval simulation system. So naval simulator is which is ARI. We spent 130 crores for that acquisition. We're going to spend. So this 130 crores is actually going to help us in a big bang to enter into the naval simulation. We have not been active in the naval simulation, but this company is the leader in marine simulation. They are not much focused on defense, but what we see is the equation is marine plus weapon simulators is equal to naval simulation. So we have the weapon simulators, and with that collaboration, that interesting combination, we should be able to meet the requirements of the navies, not only in India, but all over the world.
Okay, so 130 crores was spent on this company that makes the naval simulator. What were the cost of the other 2 acquisitions?
So the other one was about 30 crores and about 25 crores and 4 crores. Yeah.
Okay, so 25 plus 4 plus 130
About
makes
160 crores.
159 crores. Anything else on your radar for the?
So yeah,
Okay,
we are
let's round
in
it
the
off to
process
160 crores.
again we are in the process
It,
of identifying and investing in more
please continue.
companies. And I think again the our focus is what is the Pareto technologies which India can develop to make in India, a formidable force when we actually get into a war-like situation.
Okay. Now, 160 crores has been spent into acquisitions. How much do you think, Mr. Atluri, will 160 crore rupees spent on acquisitions add to your top line in FY 25-26? Now we are
I
looking beyond 900 crores.
So, I would say it would be, at least the order book itself is around 100 crores. So, we think it will be minimum 100 crores. But the actual synergies will start kicking in FY
Okay.
27. I think there will be substantial addition at that point in time. I'm not able to add it, but it will be at least 2x of what we are saying for FY 26. Yeah. It should be much more, but, we will have to, as
Okay,
we are
so FY
strategizing
26.
brainstorming with them.
So FY 25-26, which is the coming financial year, you expect 100 crores of additional sales by spending 160 crores, and the subsequent year, this will be somewhere to the tune of 320 crores, because you say it will be at least 2x the acquisition.
Yeah. So these are all conservative numbers. Again, I think FY 27 is going to be a very big number.
Yes.
This is just the order book position. They have 100 crores, so that will be executing. But FY 27 is going to be very big because that's when we'll start selling our naval simulators also.
Okay, fair point. So we have an expectation in terms of the final quarter sales profit number as well as NPM and OPM, and of course a guidance towards how these acquisitions will now move on. In terms of organic growth of sales, Mr. Atluri, what were the initiatives that were taken by Zen Technologies in the quarter gone by, which might benefit not only in the fourth but the subsequent 1 or 2 quarters as well? Anything that you are targeting overseas?
So overseas, we are in discussion with a few countries, and we think it will play out. And typically, these things till we sign it and we have the contract in hand, we don't want to talk about them. But we have been participating in overseas exhibitions. We are setting up our office in US primarily for the North American, South American, and NATO market. And with Mr. Trump pushing for Make in America purchases, I think Zen will also be a beneficiary because of certain technologies that we do very, very well. Yeah. So I think overall the export market looks very encouraging. And of course, domestic market, especially in anti-drone and simulator, they are exploding as we speak because both the training needs and the drone threats have increased in the recent times.
Okay. At the moment, Mr. Atluri, what is the percentage of sales from exports and how do you see them maybe inching up over the next 12 months?
So, overall, we are expecting about 30% of exports during the year, 30% of export sales during the year. And, in future, by FY 27, 28, we want, FY 27 and FY 28, we want the thing to go up to 50%, big, on increased growth. So I think that's what our expectation is with export, especially, given the increased threat of drones worldwide.
Okay, fair point. In terms of acquisitions, Mr. Atluri, so far you've added companies which are parallel to your own line of business in terms of anti-drones, in terms of simulators. Are you looking to, by any chance, add a fresh line of business by acquiring maybe an unrelated company but under the defense umbrella?
Actually, we look at two things. Our unrelated acquisition was in 2018 when we got into anti-drone systems and through acquisition. What we look at is when we are acquiring is, be preferably related to what we are doing, in anti-drone or to simulation space. If it is not, then our criteria is: does this company have the depth and the technical competence to become a global leader if we invest over a period of 3 to 4 years? And we are willing to invest with no income in the short term. We never put pressure on them on quarter figures. We say just deliver the product. So that is where we support. And if there is anything which is unrelated, we would think that that it has to be absolutely potential to become a global leader. Yeah, and probably we would invest in such a kind of a company also. But as of now, we are focusing in related companies.
Okay, fair point. So it's related acquisitions as well. Uh, Mr. Atluri, in terms of just the environment for defense contractors such as yours, as also the broader issues that you face with the defense ministry, do you see any positive change after Mr. Trump has taken over? Is our defense establishment a little more responsive, or is it still now anchored in the 1980s as it was earlier? We see problems with Tejas, we see problems with engines. There seems to be a lot of bureaucracy around. This is something that the air chief was also hinting at. All talk, no delivery.
So, I completely agree with your point in the sense that, it's kind of slow down a bit in the recent times. But I strongly believe that in the past 11 to 12 years, the past 10 years, 11 years, the changes that have happened are phenomenal. I mean to say that we are absolutely become a leader in, how to do procurements, the make to in which government is asking private industry to spend money. And then, if they like the product, they will buy it, is something that, America will follow us now. So we expect that that thing to be very, very conducive to R&D. But as far as the public sector units are concerned, in fact, I used to say HAL when Mr. Parikar used to, when HAL used to say, please buy our equipment. I used to suggest to Mr. Parikar that please ask them to fly in their aircrafts and come here, not in Indian Airlines or any other private airlines. So, that would be actually skin in the game, ultimate skin in the game. You can't ask pilot to fly what you are not sure about. So I think that is there in the private sector, but I mean the public sector is really catching up to the game. But again, for me, if I fail, I go down, my family goes down, my investors are let down, my employees are let down. But in the case of public sector units, if the product is not delivered, government keeps funding them forever. So I think slowly the government should PSUs should get out. And again, what I'm saying is you don't have to get fresh private talent to run them. The talent within the PSUs is extraordinary. In fact, we tried to recruit those guys, and the 10 or 20% of the guys can really change the face of Indian defense. But again, the skin in the game concept has to be introduced very strongly in PSUs also.
Mr. Atluri, on this very hopeful note, we'll call it a day, and we hope to again reconvene in the fourth quarter when possibly things will be a little more better for Zen. It's been a terrible 1.5 month for long-term shareholders of Zen Technologies. The stock has slipped from 2200 all the way down to 972, and the selling is unabated. But such is life. Ups and downs come in, especially in the case of companies and sectors where revenues are bunched up, not predictable, such as defense. And we hope the very best for you and for your team. Let's hope Q4 turns out to be 40 crores on top line and 250 crores on the 40 crores on the bottom line and 250 crores on the top line. NPM at 25 and OPM at 35%. Thank you for your time, sir.
Thank you so much.
That, ladies and gentlemen, was Mr. Ashok Atluri, CMD of Zen Technologies, defending his third quarter performance, which was fantastic year on year, but it was quarter on quarter that the market took umbrage on, and that resulted in a very sharp fall in the stock price. In any case, it was in these popular and over invested themes the defense sector, and people paid the price for buying froth and not paying attention to valuation. Let's hope the fourth quarter is good for them. Thank you for watching. Please continue with Business Today Television. There's a lot more on news on the other side of this break. Have a nice day.
The Trump administration has frozen United States Agency of International Development, or the USAID operations, crippling the world's largest humanitarian programs. But what is USAID and why has it become Trump's